Oh my goodness, Amber, we're back. How are you, my
My
friend?
long lost friend, how you been doing, Lacey?
Girl, is it Mercury retrograde? I heard somebody say it was Mercury retrograde.
Dude, this Mercury retrograde is kicking my butt,
I never even
big
knew that it
time.
was
How
like
about you?
girl, I didn't know it was a thing. This year I'm like, is something in the air? Is it a full moon? What is going on?
Uh-huh.
It's so good to see you. It's been a minute since we've
Me
done our live
too.
streams.
I know, I miss you. I miss
Too.
talking it through too. Let's get into it. We've been missing
I'm
some stuff
stoked.
here.
Listen, I'm stoked. We're jumping right in today. So, hi, everybody. If you're tuning in live, super grateful that you're going to be here with us today. My name is Laci McCarty. I am your Las Vegas real estate relocation girly and your Las Vegas bestie. And I have my wonderful, good, best friend, awesome collaborator, Amber Coleman, with me, the producing branch manager for Guild Mortgage. Amber, what have you been up to this July? What's life been like in the world of mortgages?
Keeping up with crazy town, right? Like
Yeah.
it's up, it's down, it's all over the place right now. So
Absolutely. Same in
what
my
about
world.
you?
So
What's life in real estate in July?
life on my side of the fence has been a little nutty, man. I'm telling you, some people are like kind of in this strange mindset lately, and there's a lot of negative news, which we always try to combat. We always try to help people see the positive,
Mhm.
or just have both sides to work with. And that
Mhm.
negative news has been bumming me out a little bit, but we're going to do some good stuff for everybody watching today. If you are watching live, we would love for you to partake in what we're talking about today. Ask us questions. These live streams are for you. Amber and I do these as often as we possibly can. Every now and then we get to do a streak of like every week, and then we have to take a break because life gets busy. But we are
Life
super
hits.
stoked to be back today with you. And today we're going to talk about Las Vegas mortgage rates and just kind of give some smart buyer tips to everybody and really give you our take on what the hell really is going on in the Las Vegas real estate world. I do want to say, if you are watching live, please drop it like it's hot in the comment box below. We really want to hear from you while we are live. We might share your comment
Mhm.
on screen, want to bring you into the fold. If you're watching this on replay, no problem. We would love to still see you comment, because we do revisit all of our comments and try to answer those in future live streams. Before we get started, I want to let everyone know who's watching. At the end of this, or towards the end, after we get through a few housekeeping items, Amber and I are going to be discussing an amazing loan program that I believe can counteract any of the negative BS out in the world, and really give hope on both sides of the fence as to people who are stuck going, do I buy? Do I not? I want to move to Vegas. I don't know. Like, there's a lot of people in the middle right now. What do you think, Amber?
It gets confusing. So yeah, let's help simplify it all. Sorry we've been missing so long and
No, we're good.
simplifying, but we're going to simplify it all down today, okay?
Awesome. I'm already seeing some people pop into the chat. Hey, Matt, good to see you. Thanks for being here live. Say hi to us. Tell us where you're watching from, and we're just going to jump right into it. Amber, I'm going to start asking you the hard questions up front, because the rates and the inventory are the two conversations that are happening out in the news that are really making
Mhm.
a lot of headlines. Realtors who want to be YouTubers, who are using their YouTube to say negative things, or even news outlets out there saying the crash is coming, Las Vegas is in trouble, people are fleeing the city. None of those things are actually accurate. But let's talk about rates first. Do you mind? Tell me what the hell's happened this year, and where do we stand right now?
Okay, so I feel like rates have been pretty steady,
Okay.
like throughout this year. So you'll hear all these, like, it's funny because I'll look at the news and they'll be like, oh, rates dipped to their lowest level in 3 weeks, or in their lowest level in 3 hours. I mean, like, that's what it feels like, because rates are kind of always moving. But I feel like this year, everything's been like very steady,
Okay.
like where they have been. But I did put a graph, like I do have a graph together of all the different years together. So they are a little bit, so when people say, because there's a lot of things that people will say, about the rate. So this one goes all the way back to 2001. And so you can see, like, well, let's look at 2025 right here, right? So in 2023, rates were averaging higher than where they are right now. So when you talk about rates, are so high or whatever, and everybody's waiting for them to go down, they have gone down a little bit on
Right.
the average from the recent years, right? Where
Well,
we got kind of high.
let me pause you,
Um,
because this graph is, first of all, gorgeous graph. Let's start doing more of these. These are
it's so
amazing.
pretty.
Love pretty colors. But on top of that, what good information. I just want to kind of like, let's point out what you've been saying, my friend, since
Mhm.
2020. You were like, oh,
Mhm.
girl, it is like everybody's got a candy high right now. We are all literally going to have
Mhm.
cavities because we're getting the sweet sugar of free money, basically down to
Mhm.
2.96 is, obviously when the government was doing what they could to stimulate the economy after COVID and all the things that we've been talking about. Let me just put us back on the screen real quick that we've been
Mhm.
talking about on live streams since
Mhm.
2020 while nobody else would talk about anything. We
Mhm.
were out there talking about it. Anyway, so for me, like, I just think it's important to point that out again. So when people are saying rates are, quote, too high, they're comparing it often to those moments, those days when there was a pandemic, a worldwide pandemic that the country was trying to recover from. Am
Mhm.
I right?
Yeah, and you know what? Let's go back just a little bit further because I think
Yep.
it's good to give a full perspective of what's happened with the rates.
Yep.
So like if we go back on this graph to 2001, remember we had the horrible 9/11 that happened in 2001. So
Yep.
like then things started to go down because the economy started to get in place. So every time things happened where it was bad, the rates started to move down. So you can see we had a movement down to get to 2003, and then we kind of floated right there until we hit a really bad economy in 2008. It highlights 2009 of where the rates go, and then it kind of slid down from there. But what was happening is the economy was in a really bad place after the downturn of the economy, right?
Right.
So that's when we had lower rates because the government utilizes the housing market to re-stimulate the economy. So you can kind of see that in this graph. So I think it was since like 2000, let's say 9, that
Mhm.
we've kind of gotten that little bit of sugar high, thinking that was the normal. But that's really us, like as a country, trying to recover
Right.
from what from the economy problems that we had. So we were really good for a period of time there. So we basically had like a good 12 years of nice rates.
Right.
So we all got really spoiled, but we forget what happened within all that time to cause those nice rates, because every time they tried to jump them up, then like in 2017 when they tried to jump the rates up,
Yep.
then all of a sudden the market would slow down, so then they would jump them back down, and
Right.
then we had COVID and
Right.
everything went crazy, and then everybody thought, because we had a couple years of where the rates were really good, everybody thought this is the new norm and we're going to be here forever. And look at that jump, man, from like 2021 to 2023.
Right.
That's a steep climb right there. The
Right.
crazy part about it is during that steep climb, the housing market has still carried on.
Right.
So like,
Especially here in Las Vegas specifically because we had low inventory. Right.
yeah, that's exactly what I'm segueing into. That it's the inventory that's allowed it to be able to carry on like that. So
Right.
like, so right now, if we look at the graph though, just go back to the graph one more time, just to
Yes.
look at it as a
No, you're
whole.
good. I love this graph. It's my favorite thing. We're good.
So as a whole, we hit bad times in 2008, 9, right? And so everything started going down, and then it lead into horrible times in 2020. So we have really low rates during that time. But if you look at before that and now after that, it looks like we're pretty normal, doesn't it now?
Right.
So
Yeah, it
like if
seems to
we
be, quote, normalizing as if like, I mean,
Mhm.
thank goodness right now in this moment, we're not dealing with, we don't know, we're dealing with a lot of stuff. And I'll tell you, let me just stop and say
Mhm.
in 20, when 9/11 was happening, we didn't have this much internet available, right? So now we know everything that's going on everywhere. But at the
Mhm.
end of the day, there's a lot going on in the world, but the direct impact stuff that we've been talking about hasn't really been as prevalent. So thankful that the world in this way has sort of evened out, but who knows what tomorrow brings, right?
We
But to your point,
don't.
the numbers are starting to look like what they looked like in a, quote, normal, if there is even a
Mhm.
thing called normal society, economy, all the things.
Mhm.
I wanted to touch before we move on to inventory. Thank you for that historical lesson, Mrs. Sweet. I'm going to bring you an apple next time we hang out. Before we move on to inventory, because that is in the news quite a bit, and I'm going to talk about that and give you my take. Talk to me a little bit about the Fed meeting. That was today, correct?
No, the Fed meeting that was
Oh,
yesterday.
that
So
was yesterday. I don't even know what day it is. Today's Thursday. The Fed meeting was always on Wednesdays. Fed meeting was yesterday. Tell me what happened.
I was honestly looking for fireworks because, Trump and Powell don't seem to be the best of friends.
Right.
So I had my popcorn ready for the fireworks to happen. But there was one thing that he said that was a little bit concerning to me. Okay. So at the end of the meeting, they start asking questions, and then he's answering the questions, and that's usually when all the juicy stuff come out, right? So a reporter asked, how do you justify to someone who's looking to buy a house who's facing 7% mortgage rates and maybe can't afford those rates? And Pal kind of acted like he had he had it had nothing to do with him. I was like, what? We've been doing these lives since all this. I mean, we've been doing it before that, but really since the Fed meetings happened, we were doing these lives talking about what the Fed said because they were affecting us every time they would speak. And then the other thing that he said during that same, question is there's a long-term housing shortage that we have. We haven't built enough housing. So I was like, well, that would tell us right there that there's, like inventory is kind of keeping our market going. So like the minute that the rates drop even just 0.5%.
Yep.
If we see 0.5% drop, that inventory is going to get eaten up like crazy.
And we've seen it time and time and time again. So this isn't new for sure.
Yeah. Remember how we said that 5 is the new 3 and 4 is the new 2? Once they start like even getting into the high 5s.
Yep.
On an average, then I feel like that inventory is because there's a shortage of inventory, and this is coming from Jerome Powell,
Right. And obviously he's speaking on a national level, obviously, and we are definitely a micro market as far as that goes. But I will say that that has been a different story in different markets across the nation over the last couple of years. That has never not been our story in Las Vegas. Inventory has always been an issue in Las Vegas since I started 9 years ago or whatever it is. Can you believe it's been almost 9 years? That's crazy. It's crazy.
I know.
I'm having a minute with this. It's nuts. Anyway, so what I was going to say is so as far as inventory goes, a lot of the headlines right now talk about, inventory's on the rise. It's 71% up year over year or month over month or whatever these. I mean, every headline takes a different spin. And I will not lie to you. Inventory is up. Thank God, inventory. Thank goodness. We've been waiting
for this for a long time.
Oh my God. Do you know how beautiful it is to take a buyer out? And it's not a full buyer's market yet. I'm going to be very honest with you. We're leaning into it being a more evened out. It's very evened out market. We're not all the way in a hardcore buyer's market because the really good houses still have multiple offers and still have to be competitive with what you're doing to get it. But it is so beautiful taking buyers out to look at homes and having them be able to sleep on it before making a decision, be able to consider more than one home instead of writing the offer in the car for them on the way out the door. It is so beautiful. And it's also nice for people to just have options. The homes that are listed right now, a lot of people are calling me and saying, oh, it looks like the market's crashing. And I'm just saying this loud and proud for anybody watching this. If you are trying to tell me that you know what's going on in the Las Vegas real estate market, I'm gonna get close. If you're trying to tell me that you know what's going on in the Las Vegas market because you look at Zillow and Realtor.com and you see price drops on several houses that you might be watching, you're insane. If you think that that's going to tell you the whole story. It tells you a little bit. It does not tell you the whole story. What that does tell you, and that is happening, what that does tell you is that there's a few things at play. Sellers are not quite awake yet or accepting yet, if you will, of the market shifting to be a little bit more balanced. Sellers are pissed because they waited and they didn't sell when their buddy Charlie down the street sold and he got XYZ for his house. And now things have started to even out. They were holding out. They were going to time the market. So they waited so that they could get more, and they're not getting more. There's that. There's a lot of components that come into play. Another really, really big part of it is, and I'm going to be very open, there's a billion real estate agents in Las Vegas. There's like 24,000 or something. I'm probably wrong number, but there's a lot. A lot of people who are realtors are newer to the real estate game because they got in when things were really, really hot a couple years ago, right? Because of that, there's not a lot of, historical knowledge or understanding, or really the ability to say to your sellers, hey, probably not a good idea to list it at that rate. Maybe we come down further. Let's get a little more competitive. This is a new market for new realtors is what I'm saying. So for newer realtors that are 3 years in the game, they may be great realtors, but as the markets change, you have to shift your tactics. And unfortunately, if you don't know how to stand up to your seller and tell them, sorry, I know you wish you could get that, but that's just going to force us to drop the price and die by 1,000 cuts. Then you see what you see right now on Zillow and Realtor.com. No knocking on any realtors. It's just a new market for them. Do you agree? Are you seeing the same thing?
Yeah, I agree. You know what I love though? because I'm always going to look at glass half full anyway. I
Absolutely.
love that I see so many of my people that I qualify for actually be able to ask for closing
Yes.
costs and get them, right?
Yes. Yes.
Because that's the thing, is the affordability, and sometimes
Yeah.
you just don't have the money to come out of pocket,
Yeah.
down payment, closing costs, and then but now you can actually ask for closing costs and sometimes get it, right?
Yeah. Yeah.
Sometimes you can get some to even buy down rate. I'm like,
Yeah.
woo, this
So
is
let me
getting fun.
show you the inventory. So somebody asked earlier, I think it was Leolo. He said, let me see, where did he go? He said something to the effect of, oh yeah, here it is. He said, hey, Amber and Laci, when do the numbers for July get released? Number of homes sold, market inventory, etc. First of all, Leolo, thank you for asking and for tuning in for that information. We usually don't see that. As you guys know, we have a crystal ball, but it's kind of foggy. So looking to the future is difficult. Looking to the past, which is what tells us our future typically, is something that we love. And we have a lot of those stats available, but we don't often get them until about 8 days in, 9 days in to the next month. So right now we only have June numbers. I'm going to put those numbers up on, let me take this guy down. Let me put this guy, I'm trying to figure out, they changed this format of this thing. So anyway, this is June's numbers, everyone. So June 2025. We can talk a little bit about the inventory here, but Leolo, to answer your question, it's going to likely be when Amber and I go live. We're hoping, fingers crossed, we'll have those new numbers by next Thursday. So be sure to tune in. Be sure to tune in next Thursday. We're talking about some really good stuff. We're really excited about it. So Amber and I want to talk a little bit about, the inventory. As this is the number that everyone in their news headlines is talking about, inventory. If you look at the top right corner, units available says it's up 70%. 70%. Oh my God, year over year, 70%. The reason it says it's up 70% year over year, my friends, is because we were so limited on inventory a year ago that we genuinely could not even get people into houses, or even a year and a half ago, 2 years ago. The last 2, 3 years, 4, 5 years has been insanity with trying to have enough homes. We were down to 1 month of inventory. So now to have 3.5 months last month is amazing. As of this moment right now, we have about 7,600 homes available. Now that's currently at this moment, not looking at condos, just looking at houses, which I think is amazing. I love that we have more inventory. A balanced market, something that's a little bit good on both sides, buyers and sellers, is about 4 to 6 months of inventory. Is that the number that you've been working with, Amber?
Yeah. I mean, everybody else looks at this like it's such a horrible thing, but like, we've been doing these lives for so long, and every time we do a live, we're always looking for that sweet spot, right? We're always looking for that deal people can get. And now it's like every day. So I'm like, wait, we've been looking for the deal. Now let's go get it, right? Because again, rates drop a half and we're in a whole different market.
So I love that we have more, because I think when the rates do start to come down, whenever that happens, right, we are in a position where it's like, okay, we got a little bit of chewing time, right? But then as soon as the rates do come down, investors come back, and investors will wipe us out in 5 seconds. Or people, the 4 million people that are on the sidelines waiting to buy until the rates go down, flood the market. And then it becomes a situation where people who are on the lower bracket of budget or a lower price point, or who are just like new to this and don't know the timing and how to move quickly and be nimble, they get pushed out. So Amber, I don't know about you, but I'm stoked about the market setting right now. I've got a ton of listings.
I love it.
We've coached our sellers to know that you have to be patient, and we're going to price it right. We're not going to price it unreasonably. We want to be negotiable. You're not going to negotiate. So one of the things that a lot of the myths that people are thinking about or saying to me lately is, let me see it. This one, it's a buyer's market. Sellers are in trouble. And I'm like, no, sellers are not in trouble. In essence, there are some price points that if you list and you've got quite a few, competitors, if you will, in that inventory range and that inventory lot, you might be in trouble. I would say anywhere between the 400 to 600 range, there's quite a few houses that are coming up in that range. Anything below that, snapped up quickly. Anything above that, better be a good looking house before someone's going to spend that money. But this is one of the things that I want to just say to you. It's not sellers are in trouble. However, it is starting to lean into being a little bit of a buyer's market, which means we can negotiate for you. When you see like a builder, Amber, I know we get a lot of people that consider new homes. The builders are offering all these crazy incentives that most people can't qualify for. I'm just going to be very honest. Most people can't, but they're trying. And when they come off of the builder high of like, well, how come I'll never be able to get that if I go buy a resale? Bet. Give me, test me. Let me see what I can get you from the seller. So it's not sellers are in trouble. It's really just that it's time to just start asking for more, and we'll get what we can get for you. And we've been really successful with that.
The other thing too is when you see articles like that where it says sellers are in trouble, most sellers have had their house for quite some time. So there's no other place that you can go where you can gain hundreds of thousands of dollars just by listing your house on the market. So
Yeah.
if you lost a little bit because you're selling at a time where you might have lost $20,000, dude, most sellers are in a very good place,
Yeah,
to be
for
able to
sure.
gain and do their move or whatever they're going to do. The
Yeah.
only time that it becomes a little bit troubling for sellers if you just bought a couple years ago, because
Yes.
you weren't gaining. If you were gaining 2% equity per year or 3% equity, you have to have more longevity in it to really gain all that money. But
Yeah.
let's be real, a lot of the sellers that are selling, they have a lot of equity in their houses.
Absolutely. Amber, so I know in the beginning of this, we were teasing a loan program that I'm really excited about you reviewing with us today. It's sort of the middle of the show because we still have some tips for you guys as buyers, some smart buyer tips that we're going to run through and some other myths that we want to bust. But I would love if we could like kind of throw some of this information out there so that you guys will stay tuned. Because if we compare what we're about to show you, which is this awesome program that overcomes some of the things like the high rates and all this crazy stuff, it'll ease your fears. Then if you could stay tuned for the tips, I think we might have a match made in heaven. What do you think?
Yeah, I think so too. Let's
All
do
right.
it.
So Amber, the biggest thing right now, up until recently, has been, a lot of people are coming off the fence because they're like, oh, there's more inventory, the market's going to crash, but they're still kind of barking about those rates. So this was so exciting when you told me about this. I'm going to add it to the thing now. Let's see here. Oh, there we go. See, I don't know what's wrong with this thing. Here we go. There's a program, Amber, that you can buy today and refinance later, and you're going to waive the fees. What?
Yeah. Isn't that nice? Okay, so here's the thing, because I'm it seems like I'm talking about this program more and more because the rates seem like they kind of went away for a little bit where people weren't talking about it, and now they're back, right?
Right.
Like everybody's talking about it right now. So, but keep in mind, like when you buy when rates are a little bit higher, and there's a lot of talk because I think it's because there's a lot of talk from Washington trying to get Powell to lower rates, right? So I think that's probably where it's coming from. So there's a lot of talk that rates will lower at some point. So remember how we always talked about marry the house, date the rate,
Yeah.
kind of thing. So eventually, I believe at some point we're going to hit a refi market.
Right.
And when we hit that, because remember, with the rates go down a quarter, they go down a whole point, the market's going to go crazy. All this inventory is going to be gone. House prices are going to go high. So to wait until that happens to buy is going to be a lot harder because it's going to cost you more money.
Yeah.
So it's
Sorry.
always,
I'm sneezing over here, so I apologize if you hear me sniffling.
oh, no worries, no worries. So this kind of fixes that. So if you buy where you have to take a little higher interest rate, you can refinance later, and we're going to waive all the lender fees on it.
Awesome.
So it
That's, first
definitely,
of all, that's insane. That's awesome. I mean, it's not insane,
yeah.
it's amazing. Amber, tell me what kind of a savings that is for the buyer. So like if they're going to buy now, refi later, and they have the guarantee from Guild, because you guys really don't
Mhm.
sell a lot of your mortgages away, right? You don't. A lot of companies will get you in there more. They'll sell you the mortgage, they'll do the paperwork, get you dialed in, and the next thing you know, you get a letter saying somebody else owns your mortgage. You guys, for the most part, don't do that, correct?
Yeah, so we try to hold all of our mortgages. There's some programs that you'll pick, like jumbos. Sometimes those get sold, but most of the ones we will hold. So it's going to be a guild to guild refinance,
Love
which
that.
makes it to where we can give you discounts on it, and then we're waiving the lender fees. So like when you're refinancing, you always have fees involved.
Right.
We're cutting those fees, and then we'll be looking for the title company to cut the fees too, because we don't have anything to do with the title company in that part of it.
On
So you're
average,
basically
what
going to
is
have like
that
title
on
fees.
average? Just, I know that you can't quote everyone's, but like on average, is that like a $5,000 savings, a $25,000 savings? Like, what does that look like?
No, I mean, you're not going to have any points on it. So it could be
Okay.
a 5,000 if you're used to paying points somewhere else.
Okay.
And then the lender fees are roughly around like $1,700.
First of all, so you're
Mhm.
waiving so you're telling people use the fact that there's more inventory to choose from,
Mhm.
that we can negotiate a lot more for you right now in this current
Mhm.
market. Oh, and
Mhm.
when, if you're okay with the payment right now, when
Mhm.
we're able to lower that payment, we're not going to charge you. We're just going to do it. We're good.
Yeah,
That's what
exactly.
it is,
Exactly.
right?
Yeah.
Let
Uh-huh.
me get this back up on the screen. Buy today, refinance later. We're gonna waive the fees. I'm just kind of giddy. I don't know. This is really exciting. Um, I love that for so many reasons, because we've been saying for about a year or two now. It's been about 2 years. To your
Mhm.
point, date but what was it? Fall in love with the house, but date the
Marry the
rate,
house,
right?
date the rate. Yeah.
Marry the house, date the rate. Listen, I've been getting a lot of people out in that dating pool. We've been putting a lot of people in the dating pool for that round. But even when they were, there was hesitation because of these fees and just not knowing like when the rates were going to fall, all those things. So really the goal is, Amber's one of the best things that Amber does, that you do, Amber, for our clients, is you are so good about setting up a game plan. You'll talk to someone, you'll understand their needs, you'll understand their comfort level, you'll help them overcome fears. My job is to do that as well. But the best thing that you do is you help people make the sound decision to move forward with whatever they're going to do. If someone's trying to go a little bit higher than their comfort zone and you know that that's really stretching them more than, you're really good about giving great advice. We can't tell people what to do and we can't be held responsible, but I just love that you are so good about guiding people in the right direction. Whereas I'm going to dog on other lenders. There's a lot of other lenders that it doesn't matter, right? It doesn't matter. But you and I have a real kinship when it comes to like making sure that they're good and they're good for real. Like that's amazing. So with this kind of a program, you can really be good for real because you've got the backing of that promise, which is amazing.
I love that. You're good for real. Yes, you absolutely are good for real. I mean, I truly believe, like, the thing of it is I think there's such a deep passion for just home ownership, right?
Yeah.
Like, because I feel it inside. So I'm always trying to help other people like see it.
Yeah.
See it. So like any way that we can help kind of bring that to light. Because I can say, like, once you, like, especially if it's your first that you're getting into, for me, it's like a mind shift. I don't know what I'm trying to mindset shift. I'm like, why couldn't I get that out of my mouth? It is a mindset shift though, because you're working towards the future. Like if you look at housing, I probably should have pulled up a graph of housing, like what it's done over like a long period of time, because you're always going to see the dips that happen. You're always going to have to do that. It's kind of like a leap of faith to get past that, right? But if you're looking over at long term, so you hold that house long term, there's almost no way that you're going to lose on it long term.
Absolutely.
You might lose short term, but long term, you're always going to win on it.
Now, I want to touch a little bit on a few other myths, and thank you for that. I'm grateful that we're on that same, that we really do believe in that. We're on that same path and that same kind of heart reasoning for why we do what we do. Mm-hmm. A lot of people have said to me, you're a realtor. Of course, you're going to tell me it's a good time to buy. And I just want to just be very blunt and say, I'm always going to look for a positive, just like we do on every live stream. I'm always going to look for a positive way to look at things. But there have been many times, especially on live stream, where we've said, if you're this budget or if you're this type of a buyer, it is not a good time to buy. We'll let you know when it is. We're never going to tell you it's always a good time to buy for you, but it is always a good time to buy for someone. There's always a way to look at it if it applies to that person. But some of the things that I've seen people saying lately are, like we said before, rates are too high to buy right now. So we just busted that myth with that new program that you just mentioned. I love that. A lot of people are saying, like I said before, it's a buyer's market. Sellers are in trouble. We busted that. It's definitely not a full buyer's or a seller's market. It's kind of right in the middle, but it is a negotiable market. And I love that we can compete with builders and do all the other things. It's really, really awesome. Still to this day, Amber, I don't know how many times we have talked about this. I just want to bust this myth before we move on to some of the good tips for you guys. Why does everyone still think you need 20% down to get a loan? What is wrong with our voices? Are they not carrying? What's happening?
I think it's because people come from markets like California, where California, the prices are so high that you do have to have a decent amount of money just to be able to get a loan. Right. So I think that's why it's a thing. But in Vegas, you're not looking at high price markets like that. Right. So a lot of people are doing FHA loans, even conventional loans. Like you could fit a lot within a conventional loan because it's so high right now. Right. So I think that's why.
What, 3.5% down, right?
FHA is 3.5% down. Conventionally, you can go 3% down if you're a first-time home buyer.
Love that.
And that's honestly, if I look at majority of my loans, that's what most people are doing, are those types of loans. So I just think it's because of California. We blame everything on California. Come on.
All of it's California. Screw you, California. Actually, don't, because they're sending 77% of the new residents in Las Vegas are from California. So we got to be careful because we do love them. But
we're not blaming like it's a bad thing. We're blaming the bad miss on California. We love you, California. Come on to Vegas.
We love you. We love you. So I love that. So we're going to, by the way, if you guys are watching, thank you so much for watching. If you're interested in talking to Amber and I about kind of what you could do to take advantage of this amazing program, which I'm going to put back up on the screen because I'm a weirdo and I'm going to put it in your face. If you want to try to buy today and refinance later and have that the fees associated with that waived, and work with two people that genuinely care from the bottom of our hearts, please, please, please scan the QR code in the corner of the screen. You can all, I mean, it's on all of my videos, but that's the easiest, fastest way to set up a meeting. I would love to talk to you. We do not care if you're buying now or even 10 years from now, or if you don't even know where the hell to start. Like, that's my favorite kind of phone call. So please, please, please scan that QR code. We're going to give some tips. And then if you're watching live, drop it like it's hot in the comment box. I've seen some comments going back and forth. This is a live chat. Very excited. We are going to start showing some of those comments on screen and answering your questions. So please drop it in there. And even if you're watching on replay, we want to see your comments as well. But Amber, let's give some tips real quick. What does a smart buyer look like right now, in your opinion? I'll give one tip and then you jump in. But my first tip would be call and scan the code, like scan that QR code and set up a call today. A smart buyer is ready to start talking to experts sooner rather than later. And thank God you have two experts in front of you who are willing to take the call, even if you're not quite ready. Smart buyers get ahead of it. And so that's my first tip. What about you? What are your thoughts?
So yesterday I was sitting with the buyer and she's buying her first house. And she said to me, I just don't want to make the wrong choice. And it wasn't about house, it was about timing. And I was like, you got to remember, the wrong choice is paying monthly in something that you're not paying towards yourself at all.
Right.
So the wrong choice is renting. Right. Yeah. If you can see the house payment that you want and everything works out and all the benefits of it, the wrong choice is renting instead of buying.
Good tip. Good tip. So, I mean, I think also to piggyback, the good smart buyers don't try to time the market. I know it's so tempting to try to time the market. Your uncle, your aunt, your grandma, someone's been a realtor, someone in your circle, someone's in your ear, you're hearing the news. Everyone wants to be the guy that goes, yeah, I bought that Yahoo stock at the beginning and now I'm a billionaire. I get it, right? To me, trying to time a market like real estate, especially in a market like Las Vegas, is insanity. Looking at you and I and listening to what we're saying and just following along is smart. We don't even know how to time the market, guys. Nobody knows how to time the market
because it's a long-term investment.
It's volatile, right? That is not the right way to go about it. So for me, it's the best and smartest decision is to not try to be an expert in something that you have no idea how to be an expert in, and to lean into the people who know what they're doing and who do this every day. And hearing us say, we don't even know how to time the market, but we do know how to be smart about buying a home and investing in your future. And that is doing it when there's less people buying, when there's a little bit of inventory to work with. The juiciest, crunchiest market is like a right now, when you have more to choose from. Your rates may not be what you want them to be, but they're not crazy. They're somewhat normal. And you've got, the ability to refinance and have those fees waived for you when the rates do drop. And we can negotiate for you. Like what? Yeah. Like this is the time. That's timing the market. If you want to time the market, that's how you do it, So the other tip I was going to throw out there is, buy below your approved budget, maybe just a little. So because the rates are a little bit higher, right? We let's say Amber gets you approved for 600,000. And let's say because of the market flexibility that we have right now, we know you don't necessarily have to spend 6 to get what you want. We might be able to negotiate it, lean into us to help guide you on what we can do. But it's okay to maybe not spend every dollar of the 6, because when you're refinance or knowing you're going to spend it, but knowing you're going to do the refinance and it'll get you where you want to be. But I think the biggest thing for me is everyone thinks, like I had a guy call me recently and said, I guess I got to spend $2 million to get what I want in Vegas. And I said, well, what do you want? And he named like the 5 or 6 things that he wants. And I was like, I, as a smart, kind, good realtor, am going to tell you that you don't need to spend $2 million. I would love to sell you a $2 million house. That makes me more money. We all make more money, but you actually, in reality, only need to spend about $850 to get what you want in the area that you want. And his brain fell out of his head, and he said, well, maybe I'll buy 2 with you then. And I said, well, sure. He appreciated my honesty. And he said, there's not a lot of people that would do that, but because I don't know the market, I'm really trusting you. And I said, well, I'm not doing this for you to trust me. I'm just doing it because that's the right thing. So you don't always have to spend that full budget. Rely on me and the team to really guide you, because we're always going to be open and honest like that.
One thing I'll say, though, is that, Laci, I think you're the only agent that says that.
I know I'm the only agent that says that.
Because, like, most of the time when you'll see, like, somebody qualify for, like, 600,000,
Yeah.
that I'm always being asked, can you get them up to 650? Can you get them up to 700?
Yeah.
Their comfort zone is here. Let's keep them
Yeah.
in the comfort zone if you can find the house
Yeah.
that works for
I
them.
know.
So,
I know I leave money on the table, and I'm not over here like, oh, I'm some angel. I'm just saying at the end of the day, I'm always going to be honest. And the reason I'm saying that now is likely other realtors are calling asking to get more because the client has unrealistic expectations or because the market is dictating that they have to pay more for what they really want, right? In this moment right now, I've done that with you. I've had to call and say, is there any way they can qualify for more? What they're asking for is definitely outside of the range of what they can shop in right now. And we've been able to finagle. But right now, in a moment like this, if someone's looking for 6, 7, 800,000 and they only need to spend a little bit less than that because we can negotiate or because we can piece together a deal, then of course that's our job, is to get the best deal for our clients. Money comes, money goes. I never let money lead the conversation in anything I do when it comes to me benefiting before my clients. Clients are first, always, 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 always. Yeah.
I love it.
Okay, what's another tip, Amber? Any last tip? Maybe I've got a really good one. I'm gonna juicy, crunchy put a bow on it. But what's one from you?
Okay, so one thing that I thought about recently. So I went to a convention and did you guys know that the average age of first-time home buyers 38? Did you know that, Laci?
I think you shared it with me, but it didn't really hit me and comprehend until the next day. Tell me what this means, Amber.
So I was thinking about that because I was really getting taken off guard. I'm like, 38. I felt really bad. I wasn't like louder,
Right.
because so really what's happened is since, remember, I've walked through this world since 2003 when I got into the business, right?
Right.
So I've walked through all these different markets and I've watched the news cycles in all these different markets. And since probably after we had some hard times in 8, 9, 10, 11, that most of us, probably 8, 9, 10, right? That most of us don't want to remember. But then starting probably 2011 and then 12, it really recovered. So since recovery happened and started the uphill climb, every year the media is saying, don't buy a house, the market's going to crash. Don't buy a house, the market's going to crash. And so now those poor people that listen to the media every year, the average age is 38 now, which means they lost a couple $100,000 in equity within that time period.
So the news got louder, which pulled people back to pause on buying.
Yeah.
New generations coming up to being able to buy. We're holding back because we have so much more out of fear. Wow. I'm sure there's a few other factors, but that's a really interesting
years
take.
ago.
Yeah.
Just like 12 years ago, I should have pulled this stat, but it was definitely in the low 20s that somebody was as like an average home buyer, first-time home buyer. And now it's 38. So if you just look at retirement alone, right? So like, I hate to say we're looking forward to retirement because we're not, but like, I always look at it like, how do I get through this the best way possible? Because one day I want to hang on a beach most of the day, right?
Yeah.
So how do you do that if you don't own? Because you're paying towards your future without even trying. Every payment you're paying it down, not even counting the equity that you're gaining in the house, but you're paying that payment down every payment. So at some point, 10, 15 years goes by and you're paying a mortgage, you now paid it down quite a bit to where you have a lot of equity. And then naturally the prices of houses just go up too.
Right.
But yeah, I got like, for me, I was like, I should have gotten louder. These poor people, I had to wait till 38.
We should have been. I mean, we were pretty loud the last 8 years of doing these live streams. But gosh, I get to your point. Like, first-time home buyers are losing because they're starting so much later. Yeah, that's really, that's crazy. Gosh. So the tip is don't wait. Don't wait. Okay.
Don't wait. I mean, like, if you really look at the last 12, 13 years, if you would have waited, you just left hundreds of thousands of dollars on the table.
I know we did like a few live streams ago. We did the cost of waiting kind of conversation. We should probably do that again. By the way, next Thursday, stay tuned. By tomorrow, we'll have it up ready for you to register. Amber and I are going live next Thursday. It's going to be a little bit of a later. It's going to be late night vibes with Amber and Laci. So stay tuned and be sure to subscribe so you can see the announcement. But I do think we should add that to our list in August to talk about again the cost of waiting, because it's a real thing. And now with this program, again, this program, that I'm going to shove in everyone's face again real quick is that you can buy now. And if you don't worry about the rates, you can refinance later. That even works more towards that whole goal of building equity for your future. And you don't have to wait because of a program like that. You really don't have to wait, which I love. I love that. Okay. The last tip from me, and then I'm going to jump to your comments. This is a live chat session. I'm just going to say right now, thank you guys who are watching live. You're awesome. I love it when I see there's a lot of arguments happening. I love it. The last tip for you guys is work with the right team. Please choose to work with the right team. We are both great at what we do. There's a lot of great people who do great things in this industry. If we are your vibe, if you're tuning into our content, if you want people who are direct, blunt, and who are going to, even to their own detriment, tell you the right thing to do, please lean in and let us know how we can help you. Scan that QR code. We are definitely excited about just talking to you, whether it's now, 10 years from now, or even if you don't know if Vegas is right for you. I'm not going to sit here and sell you on Vegas if Vegas is not right for you. I've actually had 2 calls in the last 2 months where I told the person, nope, probably want to go to Florida. Like you're saying, nope, this is not for you. So it's not a hard pitch, guys. It's just genuinely 2 bleeding hearts here who really want to help and guide you towards a future of living on a beach, like Amber said, for crying out loud. Like, let's get there. All right, let's jump into the comments, Amber. There's so many good comments. I'm so excited. There's a couple of questions. Sammy says, hey, ladies, happy Friday. Hey, Sammy girl. Love you, girl. I just talked to her on the phone. Have you talked to Sammy?
Yeah, we've sent some emails back and forth, right, Sammy?
Okay. Love it. Leolo, love that you're here, babe. Thank you. I love your he's doing champagne in the photo. That's my favorite kind of friend. When financing in Vegas, do the various monthly expenses get bundled into one payment, like mortgage, PMI, tax, HOA, etc., or does the buyer have to make separate individual payments? Great question, Amber. My love.
That is a great question. I love it. So, okay, it depends on the loan programs. Most of the time, you're going to do what's called an escrow account. So most of the time, most people decide to put their principal, interest, taxes, insurance, and mortgage insurance all in one payment, right? The HOA will, and I just had a client reach out to me yesterday saying, I thought my HOA was included in my payment. No, girl, you got to pay that separately. So because we'll always put it in the debt ratio, but it's never included in the payment, okay? So yeah. HOA, you're always going to be billed separately from the HOA company. That's not included in your payment. Right. But a lot of times, most of the loan programs will require, like some of them will require you to put the taxes, insurance in there. Conventional, you have the choice if you're putting a specific amount down. But the easiest way, in my opinion, this is personal opinion, is to just bundle your principal, interest, taxes, insurance, and mortgage insurance in the same payment and then pay the HOA separately. So most time it's 2 checks that you're going to write, one for your whole payment, one for your HOA.
The only other thing that would be a separate payment, if you had SID and LID fees that are a separate payment that go to that repays a bond that was issued by the government to help build out the neighborhoods or develop the area for housing. So you'll know well in advance if that's included in your payment. And usually there's a 2 times per year payment that happens. It's a separate check. But otherwise, nice answer, Amber. Let's see. Angelo says homes are barely affordable if interest rates were next to nothing. That's right, Angelo. When the interest rates drop, the home prices go up. So finding this sweet spot right now is a good thing to do. Let's see here. Sue J says, hey, ladies, it's great to catch you live and catch up on what's happening. Hey, Sue, good to see you. Thanks for tuning in. Sean says, is it easier if you're paying cash to purchase a home? So I'll take this one. A lot of people use the term cash is king. Have you heard that, Amber? Cash is king?
Oh, yeah. That's what was just going through my head, actually.
Yeah. Cash is king is a saying that's been running through the world, with a Superman cape on for a long time. Cash is king when it's a market where that aligns and makes sense with it. Right now, I think cash is king was really big, Amber, when loans weren't as reliable, right? Like back in the day, before there were so many rules and regulations and like really stiff stipulations related to getting approved for a loan. Cash is king became very, very prominent because it was like, I don't want to worry if this guy's loan's going to get canceled halfway through. And I don't want to worry about that lender if they're on the up and up, whatever. Cash was king in those modes. Right now, I'll be very honest with you. Cash doesn't make a damn bit of a difference when we're making an offer on houses. In fact, I have a client that's buying a $1.6 million house right now. It's an amazing house. It's one of those vintage Vegas homes. I love it. It's amazing.
Oh, it's your favorite thing, huh?
Like, can I please house sit when you're out of town? I just want to stay. And he's paying 1.6 cash, and he thought that it was going to be cash is king and I'm going to be able to negotiate all this money off. It made no difference. And now he's considering going to a loan because he's like, wait a minute, do I really want to tie up all that money into it? So he's considering getting a loan instead. So because it didn't make a difference, he didn't care. So I really think it only applies, big time only applies when you're in a hurry and you want to close quickly and the seller really needs to get it closed quickly, or in a time like when loans are less reliable, which thanks to people like Amber, they're really reliable. So we're good. Are your thoughts on the cash is king?
I mean, I was only going to say when you need speed, you know, like
Speed,
if a seller's looking to sell it to you for a lot less because you're paying cash and you can close it fast, I would say that's when it's king. But
that's when that's now is the only time it's really relatable. And there are moments like that, divorces or someone passed away. Like there's a lot of reasoning for that, people getting moved, whatever, but you know, it's not really as prevalent as it was before. Sean is asking, what's a better way to go, condo or townhome? Amber, what's your opinion on that?
Okay, so condos, I'm just going to explain it really fast. Okay, so with a condo, you only own what's inside the walls. The land, the roof, and sometimes the outer walls are all owned by the HOA. So for financing purposes, condos are harder because as a mortgage company, we have to qualify not only you, but the HOA has to go through qualification. And a lot of times the HOA falls short of being able to qualify.
Girl, you remember last March? Remember that one we did last March?
Yeah, that was a fun one. So and they've been running into problems just like we saw, you know, but townhouses, you own the land, you know, and so you can qualify just like a single family house. So when you're looking for a better way to go, I mean, that's like, it's more like what your lifestyle you want. But as far as financing is concerned, I think townhouses.
Yeah. I would agree with you for all the reasons you just said, but also townhouses have a tendency to, even though they put them in that, when I put up this report, you know, they're always talking about, let me get this one to go away. I got to figure out how to do this. Whenever they put condo townhouse units in the same section, that gold section at the bottom, I've noticed that townhouses have a tendency to skew higher when it comes to value, and they get closer to the single family price points in general across the board. Condos are like apartments. Townhomes are lean into far more of a single family home lifestyle. So they're far more viable for someone who might need a little more space, might want a little bit of a tiny backyard or a garage, things like that are more, more possibly included in those. So I would go townhome. Condos are great investments if that's the kind of lifestyle you want and you just want to be able to pop in, pop out. You like the security, the amenities, but most of the time from a value perspective, townhome for sure. This is a good one, Sean. When purchasing as the buyer, do you pay closing costs? Great question. Amber, can you answer this one?
Okay, so typically when you're purchasing as a buyer, you're going to have your down payment, unless you do a program that doesn't have a down payment, and then you're going to have closing costs on top of that. So you do have both, but in seller's market, like when you're looking at when you can ask the seller to pay things, then you can ask for the seller to pay those closing costs for you. So that's why we like these kind of markets.
Yeah. It's not guaranteed, but it now is a market where if we were going to ask for something, a lot of times people say to me, oh, well, I want to get the house for less. I want to get the house for less. And I say, the house for less, Amber, how much does that, if I were to get $10,000 off the top of a house, round numbers, does that make as much of an impact on someone's payment as maybe saying upfront costs of 2% of the value of the loan are going to be gone because the seller is going to pay that for you? Like, what's your opinion on having seller pay closing costs or paying $10,000 less for the house?
I mean, if you're looking for the cheapest payment, it's going to be closing costs versus how price off the house. If you're looking for long term, you want to pay it off and you don't care about paying closing costs out of your pocket, then you want, then you want it off the house. So it kind of depends on where you're at.
It used to, and again, these are not numbers that you can quote me on because it's always different based on rates. I keep bumping my computer. But at one point, God, several years ago, it was like, if you were to get 10 grand off the top of the house, it maybe took $100 or $50 to $100 off of the payment for you each month versus $2,000 to $3,000 or $1,500 to $5,000, depending on the upfront cost to get into the home. So again, we can run those numbers for you when we're in that process, but you do pay, you are responsible for paying closing costs. But if you have a great team and it's a great market, we might be able to get that covered for you. So good question. Let me see here. Oh, this is a good one. Leolo, if you put less than 20% down, what's the formula for determining your PMI payments? Will you walk through what PMI is, Amber, real quick?
So the formula is hard. So what PMI is, if you're putting less than 20% down on a conventional loan, there's mortgage insurance attached to it. So like FHA's mortgage insurance, you're going to pay upfront mortgage insurance, and then you're going to pay monthly mortgage insurance. The upfront is 1.75% that's added to your loan amount. The monthly is 0.55% added to your loan amount. Conventional depends on what your FICO score is, what your debt ratio is. It has a lot of determining factors to it, so it's hard to give you like a formula for that. And then so that's why when we talk, we'll weigh FHA versus conventional and the mortgage insurance for both sides to be able to see like what works better for you, like what saves you on the payment.
See, I choose the best experts to have next to me. Am I right? You're the best. I love this.
Thanks.
I want to promote one more time. If you are sitting on the fence and wondering if now's a good time to buy, please don't try to be an expert and try to time the market. You will absolutely miss the mark, in my opinion. You won't absolutely, but you're 99% going to miss the mark unless you lean into our guidance here and realize that right now is a really good time to buy when it comes to getting a good deal and us being able to negotiate some things for you. You are going to pay a little bit of a higher rate than what we're used to over the last candy high 6, 7, 8, 10 years. However, as we showcased earlier, rates are really evened out and equalized to what it was kind of like before life was crazy in the world that we live in. All of that to be said, when rates do drop, because we all know that what goes up must come down, I'm sure, when it comes to rates, right? Someday when they drop, this awesome payment protection program is in place. And we want to make sure that anyone watching is aware of the fact that you can buy today with a team like mine who can negotiate a really screaming deal for you. We'll do our damnedest. That's what we do best, to be honest with you. And refinance it later and not have it cost you a damn thing. The only thing it possibly could cost you would be a possible title fee, which is very low, and we would try to negotiate that off for you. So why I'm bringing this up, Amber, is because Matt Smith is saying, how long can you refinance for when it comes to that program?
I mean, with that program, you can, whenever rates go down, we're going to refinance you on that program.
So as long as you own the home, you can refinance it, correct?
Yeah. So remember when you're doing a loan, like when I do the loan, we're going to lock it guild to guild. So when the market goes down, then we're going to be able to just take and either straight, depending on what kind of loan you do, we'll streamline it or we'll refinance it, but we're going to waive the fees on it.
I'm just so stoked about that program. And if I was a buyer on the fence, which I have been in the past, I've tried to time the market even before I was in this job. And I'm telling you, it will bend your mind in ways that you don't want it to go, like trying to figure it out. I took such a deep breath when you told me about that program, because as long as we can find that sweet spot for where the payment's not too crazy and we can get a great deal on the house and we can do all the things to, absorb as much of those costs into the great negotiation that we do, like, why would you wait? Hello. Why would you wait for rates to drop when everybody and their mom's doing the same thing? It just is it's awesome. So thank you to Guild for coming up with this awesome program. Okay. Amber, Sammy said, what do I need to do to change my name on the house? This is a great question, actually. A lot of people have purchased homes and then gotten married after the fact, like our sweet friend Sammy and Boomer. Or Boom, we call him Boom. Sorry, not Boomer, but Boom. So what would they need to do, Amber? What's the process?
That's a great question to me. Huh?
For the loan, sorry.
On the loan, I believe you just need to probably submit your marriage certificate. Yes. Well, did you already get your name changed on your driver's license too?
Yes, that's yeah.
So if you got it changed on your driver's license, then we'll submit both of them to the servicing department to have your last name changed on it. Thanks for asking questions and getting me all stumped over it.
Amazing question. I would also say contact the title company that we worked with, the escrow company that we worked with, so that they can help you connect with the county recorder's office and work on the deed and getting the deed changed over as well. It's really not a big deal. If you guys were to go to sell that house, it's not going to be a big deal that your name is different there than it is now. They'll just ask for the new ID, your marriage certificate, and all the things. But if you just want to see both of your names nested next to each other on the county recorder and on the deed, because it's a romantic thing.
You guys are adorable.
Because you're adorable. We love you. Then please go, contact the title and escrow company, and we can guide you to find the contact information. This was a great question from Sean. We've got about 3 or 4 more questions, and then we'll let you guys go for today. This has been a great live stream, by the way. We've got a lot of great people in here. Sean says, how do you find safe areas in Vegas to live? Boy, oh boy, is this a loaded question. Let me just run right into it with my arms wide open. I feel like I need to sing that song, with arms wide open. Anyway, it is, as a realtor, it's very tricky to promise anyone. And so I never promise you safety, right? We can't promise safety. We are a normal city. We have normal crime things that happen here. What I do recommend, though, is working with someone like me and my team, someone like us, people like us. I don't even know if I'm saying that right. Work with me is what I'm saying.
Perfect. Work with Laci. That's what she means.
I have moved probably 30 to 60 times in my life. There's a big gap there because I don't remember most of it, but I've moved a lot in my life. And while that wasn't great for my childhood, it was great for being a realtor because I've personally got personal experience in a lot of neighborhoods around town. And I say that because it made me a good realtor, but it also made me really feel what this city feels like in a lot of places when it comes to that. Things change. Obviously, the city evolves. So we always say work with someone who knows the areas, who can kind of guide you to what might be the right fit for you and what your expectations are. Crime maps are a big deal. I would recommend tuning into the Las Vegas Metropolitan Police Department or City of North Las Vegas or City of Henderson websites. I'm actually doing a couple of videos coming up soon about that. So, but you can find that online. Just Google it, crime stats, Las Vegas, and just zoom in on zip codes and see where like the hot spots are that you might want to stay away from. But please know, Summerlin, one of the most popular places that everybody and their mama wants to move to, also has crime. And so does Henderson. And it's a matter of just understanding, like, the not living through fear and understanding, like, leaning into what we know will be right for you when it comes to the vibe of the neighborhood and knowing to just protect yourself. So, so how do you find safe areas in Vegas to live? You call me, scan that code on the screen right there. I'll help you decide what's going to be right and what your expectations of safe look like. And we can talk about it. I just have to give myself a little props because I'm thinking.
I love that answer, Laci. Oh yeah, you do look good.
I know, right? Sean said, "Is Desert Shores a good place to live?" Have you been to Desert Shores lately, Amber? I love that area.
Well, Sammy just answered that question for you in the.
I was trying to give you a second to answer it, you punk. And I'll bring it up. Here we go. She said, Desert Shores is a beautiful area. I think safe is relative in Vegas. I drove all over Vegas before I moved here to see what it felt like for home for me. First of all, Sammy, when are you going to be a realtor, girl? I know you got that test. I know you're waiting to pass that test.
Oh, that's true. You were going to be a realtor.
Come on, girl, come work with me. This is the kind of person I need. This is what we're talking about. We're not blowing smoke. She's a client. She is not a realtor. She does not have a license. And she's saying what I was just going to say. Desert Shores is dope. It's amazing. It's like this best kept secret that nobody knows about. And well, now you do, because we just opened up.
I don't think people in Desert Shores want everybody talking about it online.
I know. Whoops.
I think they like it secret.
Yeah. Actually, let's see. Okay, here's a quick question. If your HOA hits you with a special assessment and you can no longer afford the loan, can anything be done for you, Amber? Have you ever had that happen, where the HOA comes through with a special big $4,000 assessment or something to all homeowners? That's not very common, but what have you seen?
Okay, so I handle the loan when you're buying the house.
Right.
So if they hit you with an assessment afterwards, it's kind of a new world, to be quite honest with you, because that is kind of happening. And you said that's happening in some areas where they're hitting it?
I've actually only seen it. I've seen it one time in my 9 years. One time. I don't think that it's maybe Matt, let us know. Is that happening to you, or do you know somebody who's dealing with that? I've not seen that happen. But when someone's having trouble paying their loan, Amber, there's like because of the 2008 financial crisis and because of the pandemic and all these things that have happened, there's a lot of programs that will assist homeowners before they lose their home, right? There's a lot of processes in place that help people get over the hump before they just have to let go. Am I right?
Yeah. So, and that's one of the things, like, I think that, the lenders kind of practiced this during COVID. So during COVID, when a lot of people lost their jobs just because of what was happening in the nation, they were calling the servicing department for whoever they were paying their mortgage to. Yeah. And the mortgage was then putting it, like deferring the payment back. So instead of having it on a 30-year fix, you did a 31-year. Like, you moved your loan 12 months out or 2 months out or whatever to be able to help it. So that's what you'll see a lot if you run into like problems. You definitely want to call the servicing department and then kind of talk that through and maybe try to help with the payment in some ways. That would be the first thing I would say to do.
Yeah, and we never are going to encourage you to miss payments or do anything of that nature to ruin your credit. But the servicing department can let you know what's required in order for them to be able to assist you. But just know that that stuff does happen. Again, it's not common here in Vegas, but it does happen. And unfortunately, it can put people into a real bind. The great news, though, is that there are programs out there to help, and that all is not lost. And that just take a deep breath. Call those who you trust, and you can lean into what they have come up with to help people for those moments. Boomer says, Laci, how are you going to pop up at my job, but we haven't seen you at our house in ages? First of all, did I tell you that happened? I was going to a pool day on, I think it was 4th of July. I think it was actually 4th of July. I was going to my friend's house on a pool day. And I'm getting out of my car and I'm walking up, and this guy is walking next to me, and he's very nice, was going to open the gate for me to get in. And I was like, we both stopped, and I was like, what are you doing here? And it was Boomer. He worked there, I guess. So I was like, what the hell?
That's
so it's
awesome.
random. Yeah. So I will come to your house you have to come to my house next, guys. Let's see. There's a couple of something here let's see. Let me see here. Somebody had said, I think it was Sean. He said, oh, I guess I just need to come down there and drive around. I want to just, I think it's in the comments somewhere. But anyway, I love that you said that, because that is something that I really encourage anybody who's considering moving to Vegas to do. You have to physically feel what it feels like in this city. You can trust me all day, and I'm not going to steer you wrong, but that's on my gut, not necessarily yours. So Sammy's right. Driving around and getting a vibe is really important. But I have created a really awesome self-guided city tour that I will provide to you to help with that process, my friends. Yeah, I'm a badass. You can say it. Let's say
you are a badass.
So when we do the phone call, that you're going to scan that code really quick and set up a phone call with me, I'm going to be able to send you a self-guided city tour that is a Google Maps link. I have color coded each section of town. So when I do a video that says Northwest versus Southwest, or we're over here in Cadence or whatever, you're going to be able to know where you are because of my awesomeness that I created for you. So if you're looking at just coming to explore Vegas and learn more, you better give me a call, my friends, and we'll get you set up and hooked up. It's really important to me that you have tools to help you with that relocation process, and you're not just relying on what I'm saying to you. So I couldn't find it, but I still sold it. Right? This is good. It's good. Okay.
You did. I second that. You are a badass, Laci. Okay.
Well, thank you. Appreciate you. I'm feeling good. I'm looking good.
What other agent do you know that has a self-guided tour?
Not one of them. Exactly. Nobody. I had to create it because I had back problems from doing so many, driving people around, so many 3-hour tours. I literally got back problems from it. It's horrible. Okay. Let's see. Oh my goodness. Okay. I think. Oh, somebody's saying, look at the Northwest. Laci was our agent and showed us our house, and it was a perfect fit. Thank you, Boomer. You guys are awesome. I really do. I am joking most of the time when I'm over here, puffing my ego. I don't have an ego. I really just have an ego for you. I want you to get the best, and I know you deserve the best. And Amber is the same. We are so passionate about making sure that that you get the truth, that you get the best deal we can possibly make, and that you feel that it's a fun experience in the process. So I do the fun part. Amber does the hard part, although she's a lot more fun than me. And we really do want to.
Whatever. Whatever. I don't think you guys believe that. Okay.
I had someone call me the other day and say, when are you and Amber going out to do your foodie eating live streams? I said, never. We're never doing it again. So Amber was fun. We did fun stuff. So anyway, Leolo says, I'll be in early September hoping to do some exploring. Leolo, you better reach out. Let's talk.
September's around the corner, huh?
It's August tomorrow. It's August tomorrow. What the hell is going on?
It's
anyway,
crazy. Yeah.
I know it's getting late. It's after 7. Oh my God, I have to put this up. It's just going to make me cry. We trust Amber and Laci with our kids' home purchase. Look at this. I mean, you definitely get our situation where I'm going to cry. We did not pay them, although I'll send you the money later. I love you guys. Truly, if you can't tell, we love our clients. They become friends. We do try to continue to stay in touch when it's possible. And this just feels so good to be back on live with you, my friend. I've missed you a lot. It's been a crazy month.
How long has it been? It's been crazy.
It's been a minute. It's been a crazy month. So Amber and I, we're back loud and proud. I'm going to be live again tomorrow doing something else. It won't be with Amber, so it will not be as pretty and it will not be as fun, but I'm going to be talking about some other stuff.
Fun.
But next Thursday, next Thursday. Tomorrow, I don't even remember what I'm talking about tomorrow. Actually, I have to pull it up. I think I'm doing some more myths about the market, talking more in depth about the not necessarily the rates, but the inventory, because there's a lot of noise out there about it. So I'm going to be breaking that down along with some other stuff.
That's good. You should be doing that.
I'm bringing the heavy hitters in to like help me with numbers and stuff, because I'm just here to look good. I'm not here to do numbers. Amber, I just want to say thank you again. Once again, I'm going to throw this back on the stage for everybody to look at. If you guys are considering buying at all ever, now is the juiciest, crunchiest market I think we've ever seen in a minute. We've got more inventory. We've got insanely good deals that we can negotiate. It is not the sellers are in trouble kind of market, but it is in we better all be ready to negotiate kind of market. So if you're considering it, don't wait. Let us lead you down the path to getting into the house sooner, and you can even refinance later, and they're going to waive the fees if you work with my sweet Amber here. So we are going to be back next Thursday. I'm going to bring wine next time. So you know how I do when I have the wine.
Because it's going to be late. It's going to be late. So you better bring one for you and one for me.
It is. I'm going to have two. I'm going to be doing.
You're going to have two.
Yes.
Yeah.
Yes. Yeah. We are going to be doing late night vibes with Amber and Laci. It's going to be an Ask Me Anything. And we are really going to talk a lot next week about if you're moving to Vegas, some must know tips that you need to know about, because it is possible to move and buy before you move or buy in the process. It's possible to do all those things. We are really good at this. We've been doing it for a long time together, but we're going to give some really big tips for relocation buyers and just kind of lead you down the path of the yes, because should be the year of yes for you, if you ask me.
That's a good vibe. Yeah. It's the year of yes for you. I like it.
Like this. We're going to make it happen. We're going to make it possible. All right, guys, I'm going to go fix my hair one more time if I haven't done it enough on this live stream. Amber, love you so much. I'll see you next time.
Love you too.
Bye.